Is your company operating across multiple subsidiaries or legal entities with centralized finance teams? NetSuite has very strong features for automated intercompany management. Hello! For those new to my channel, my name is Rose.ns.expert, a CPA and a multi-certified NetSuite consultant. I have been working with NetSuite for more than 11 years now in different industries, so if you are here to learn about NetSuite, then you are on the right channel. For this video, I will guide you on how NetSuite automates your month-end intercompany processes for elimination and consolidated reporting.
On month-end close process in NetSuite, part of the checklist would be to calculate consolidated exchange rates and eliminate intercompany transactions. Let us understand first about base currencies and consolidated rates. Each of the legal entity is assigned its base or reporting currency. When you run a report under a particular subsidiary, no matter what the currency of the transaction is, on the GL, NetSuite automatically converts into this base currency using the daily exchange rates. On the other hand, when you run consolidated reports on a parent subsidiary, it uses consolidated exchange rates to ensure that currency amounts translate properly from child to parent subsidiaries for consolidated reporting. For example, on my account, each legal entity is assigned its base currency. I have a subsidiary in France under euro-based currency and is owned by another entity in Europe that reports using British pound currency. When I run financial report under France subsidiary, notice that it uses euro as the reporting currency. Notice 1015 checking account that has 564,091.40 euro. When I run at consolidated level, that amount is translated using the parent's base currency, which is in this case, British pound. NetSuite uses the consolidated exchange rate table that can automatically be calculated on month end and can be overridden as necessary. To run, on the accounting period checklist for the period, click on Calculate Consolidated Exchange Rates task and click on Calculate Consolidated Exchange Rates button, Calculate. Here's the documented calculation by NetSuite on the back end. Accounts in NetSuite are assigned with the rate types. By default, equity accounts are assigned with historical rate, all other balance sheet accounts are assigned with current rate, and income statement accounts are assigned with average rate. Let us now discuss NetSuite's automatic elimination process. Normally, for every set of parent and child group, we insert an elimination subsidiary. It is a subsidiary tagged under a parent group that is marked as elimination. This is not a real subsidiary. We cannot post transactions to it except for elimination journal entries to aid consolidation. For example, this is my company's hierarchy. From a top-level parent and to its children, Americas, APAC, and EMEA, I inserted an elimination subsidiary. Notice that I also inserted elimination subsidiaries for the Americas subgroup, APAC subgroup, and EMEA subgroup. So how does it work? On my previous videos on intercompany transactions, remember that NetSuite automatically flags intercompany GL account for elimination. Intercompany accounts are GL accounts that are marked yes for eliminate intercompany transactions. It is best practice to share it across all subsidiaries. On month-end process, NetSuite detects all these transaction lines and automatically creates elimination journal entries. This saves a lot of hours performing manual entries. To run, on the accounting periods checklist for the period, click on Eliminate Intercompany Transactions. Click on Run Intercompany Elimination button. You can also select the segments to use on the elimination journal. For now, I will just click on Save. Status of tab is available to track the progress, and you can see the % completion. Once status is complete, you can check on the Results tab, and you would be able to view the elimination journals. Since I have multi-book enabled on my account, it would create separate journals for my primary and my secondary book. Let us view journals that it creates. You can see that this journal eliminates intercompany income statement accounts. To make sure that journals always balances, any difference will post to a system account Cumulative Translation Adjustment Elimination or CTAE. Notice that the other journal eliminates intercompany receivables and payable accounts. What is good is that NetSuite links these entry lines to the source where the entry is created from. NetSuite has native report for intercompany elimination, so you can see all the details of all intercompany transactions, the companies transacting with each other, and the elimination journals created by the system. The data on the report is drillable, so you can see the actual records when being reviewed. When done with the review, you can go ahead and complete the task on the period checklist. Now, let us see the effect of elimination entries in our financial reports. I am running a standard balance sheet report for the current month, consolidated at the top level, and I will show the subsidiaries in the column. Note that when running the consolidated reports, the balances of the elimination subsidiary would show. This will ensure that intercompany account balances are netting to zero at consolidated level.
Thank you so much for watching my video. Feel free to drop your thoughts or comments and let's chat. If you need NetSuite assistance, you can contact me directly or my team at Simply Put. We take pride with the service we provide. Have a blessed day ahead!